Hey, everybody, welcome back to Grain Markets and Other Stuff. Thank you for joining me. It is Tuesday, October 27th at about midday here. Figured I would take a moment today and just run through the corn charts and give you kind of an update on the technical situation. I did three sets of these chart reviews a couple of weeks back, and I had a lot of positive feedback. So I figured maybe this would be something I would do a little bit more regularly. Just take a few minutes to run through the charts, give you some potential upside targets, maybe some potential downside targets, just kind of a lay of the land in terms of the technical standpoint here. Tomorrow, I have an interesting episode planned. I have a friend of mine, Ken Morrison from Morrison on the Markets. We are going to do a podcast and YouTube episode regarding China and everything about China, all of these purchases, the import program, what they actually need to buy, how Brazil is going to work into this, pricing, what's possible, all of that sort of stuff. And Ken has some experience in that stuff, and I think it's going to be a real interesting episode. It's going to be live streaming on YouTube at 12 Central tomorrow, which is Wednesday the 28th, and then the recordings will be available on all the podcast apps and also on YouTube as well. So certainly check that out. I've actually never had a guest on the podcast or the YouTube channel since I started, so this is kind of a first. I think I've got the technical, the audio, visual, and all that straightened out. But we will see what happens. So again, thank you for tuning in, and certainly stay tuned for that episode tomorrow. So let's get right into it here. I'm going to go and start with the weekly corn chart. And if you're listening, I'll be able to explain this to you pretty easily. So December corn nearby contract is sitting about $4.18 as I speak here this morning. And when you look at the charts, you go back the last several years, there's a few areas of resistance that stick out here above current levels. The first one to me is this 439 level. And this is a continuation chart, a weekly continuation chart, which again, I discussed this and explain it. I did explain it in the previous episodes, but I'll explain it again. A continuation chart tracks the spot month contract. It's December corn right now. It's going to be March corn when December corn goes off the board. So we're at $4.18 here as I speak here. That 439 level, spot month corn future, sticks out. We topped there twice. Essentially once in 2015 and once in 2016, within a few ticks of that 439 level. That's a big spot that sticks out to me. It's about 20 cents above the market, certainly achievable if the right things were to happen. And I would say that given where we're at right now, that may be a logical upside target looking at this weekly corn chart for a spot month contract. If you were to trade beyond that 439 level, in spot month futures, which again are now December, will be March here, a month or two down the road. 464 from back in 2019. That was where we peaked on the 2019 spring rally when we couldn't get the crop planted, had really wet conditions. 464 and a quarter was that peak. But I think that 439, when I look at the weekly chart, is a big technical hurdle from this point, just looking at the weekly chart in a vacuum. Now, when I pull up the December daily chart, you're going to see something a little bit different. But when you look at the weekly chart, you go back over the last 4 or 5 years, that's kind of the number that sticks out. There was another high here in 2018 at about, what was this high here? Would have been like 414 or 417, somewhere in that neighborhood. And it was actually 412 and a quarter. We're above that, and that's why I'm not discussing that 2018 high. 412 and a quarter was the high from 2018. So that 439 level on the weekly definitely sticks out. Now, if I peel back this weekly chart and we start looking at some more stuff, you go back to this like pre-2014 time frame, and then you've got some crazy high, $5, $6, $7, $8 prices. I'm not going to start talking a whole lot about those right now. I think it's probably better to just focus on what's in front of us here for the moment, which again would be 439 and then 464. I think are probably your two hurdles. Now, the daily chart is interesting to me because I've got some stuff to the upside and also some stuff to the downside, which I know that people haven't been talking as much about lately because, we're in a bull market. The thing seems to go up just about every day. We haven't been able to sustain any sort of sell-off, yet you've got to be prepared for some sort of downside here at some point. And yes, I'm aware the market looks bulletproof right now, and maybe that's the case, but there will be a correction at the very least at some point in time. 424 even is the contract high for this December 2020 contract. I'm not talking continuation basis. I'm talking just this December 2020 contract. And we posted that high way back it was when they started trading this contract. It would have been in 2018. We traded 424, and we got actually within just a few ticks of that today. And there was another high back from 2019. We topped at 423 and a half, I believe, in July of 2019. So that 423, 424 area, just in this December contract. Again, the December contract in a vacuum is certainly interesting. And the fact that we went up and got within a couple of cents of that today, I guess, is interesting. So you've got, depending on which chart you look at, and again, this charting stuff, it's much more of an art than a science, because there's so many different ways you can look at these charts and manipulate these charts. The continuation chart looks different than the daily chart, and you can start going by different time frames. It can get monotonous and complicated. I'm trying to keep this as simple as possible right now. When you look at the downside, you see this trend line on my chart here that comes up off of the August lows. It's just a straight line that tags the August lows and then the September lows. This is kind of what's a little bit scary to me, is that this trend line today, and it rises every single day, but this trend line today is sitting at about $3.85 under the December corn contract. And I guess the thing that concerns me a little bit is that if you were to see a significant correction in this corn market, let's just say we kind of like see a sell-off, but not a collapse, and we go back and just correct this thing a little bit, I think you could very easily go back to that 385 level. And the thing is that you could go to 385 while maintaining an uptrend. And that would be kind of crazy because, you go to 385, you maintain an uptrend. The difference between 418 on the board today, December futures, and 385 December futures is probably the difference between profitability and no profitability for a lot of farmers out there. So I think, given this chart and given how I've seen these trend lines work over the years, there's a possibility that you go down and you tag that trend line, which again, today sits at 385. It rises every day, but there's always the potential that at some point throughout this rally, whether it's this week or a month from now or 6 months from now, we go down and tag one of these trend lines and make everybody nervous for a moment. But you could go down and do that again. You could go trade 385 and do it later this week while maintaining an uptrend in the market, which is really unbelievable. It speaks to two things. It speaks to, one, just how extended this rally has become, and two, just how much downside risk that there is. There's always risk, especially when you get into these steep uptrending markets like we have here in the corn. So I would say short term, you're nearby December corn. I mean, 424 is your hurdle that you've got to get over. And we could very easily be there even by the end of the day today or tomorrow. And to the downside, I mean, you've got to keep an eye on that trend line that comes up from the August lows through those September lows. And it sits at about 385 today. And again, it rises every day. And that, if you were to see a sell-off, and I'm not saying a sell-off is going to happen. I'm saying that if it does happen, and it happens, say this week, say next week, you've got to keep an eye on that trend line for some sort of potential downside target. And then on the weekly chart, that 439 number for whichever spot month futures contract we're trading is going to be a big hurdle if you can tack another 20 cents on this thing. I hope this was useful to you. I know this was kind of a short look at the charts, but I wanted to throw some numbers out there and give you an idea what was possible in both directions. If you do like this kind of thing, you like these chart reviews, let me know. I really love hearing feedback from you guys who are watching and listening. I like to know what you think is interesting and what you think is boring or not useful. If this is useful, let me know. Just drop it in the YouTube comments or shoot me an email to info@standardgrain.com. I'd really, really, really love any feedback that I can get. Everyone have a wonderful day today. Remember, if you do need some help with your grain marketing, go to standardgrain.com, click on Grain Marketing Plan, check out that subscription service. I would be happy to talk to you about it if you have any questions. Everyone have a wonderful day today. I will talk to you in the morning.